Hello, welcome to the European Open briefing for Thursday, June 29th. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing some major moves in pairs such as the euro and the pound. The yen is broadly weaker this morning as signs that central banks around the world are getting ready to tighten policy, and that's central banks apart from the Fed, of course. This is putting downwards pressure on the dollar. Apart from the dollar yen pair, we're seeing the dollar index at its lowest since October 2016, while commodity currencies are also benefiting from both a weaker dollar as well as higher commodity prices. We're seeing the Aussie at a 3-month high and the loonie at a 4.5-month high. But let's start now with the dollar. We can see quite a deviation with the dollar index and the dollar yen pair. The yen is out of demand, mainly down to the fact that we're seeing increasing prospects of higher interest rates in other parts of the world, such as in Canada, the Eurozone, and the UK. So the yen is broadly weaker. The dollar yen is currently trading just above the 112 level. The dollar index, on the other hand, is at an 8-month low, and this is due to the narrowing monetary policy divergence between the Fed and the central banks of the Eurozone, the UK, and Canada. We can see that dollar index is trading at 95.88 at the moment. So let's see what are the reasons that are pushing the euro and the pound higher. Starting with the euro, we can see that it just hit a fresh 1-year high of 1.1431. The euro is now at its highest since the Brexit referendum. We had, of course, that not so dovish speech by Mario Draghi, the ECB president in Portugal, on Tuesday, where he said that the deflationary forces are being replaced by reflationary ones, and that the ECB may need to start adjusting policy as the Eurozone economy gathers pace. But then we had some reports that ECB sources have attempted to talk down the euro's big gains that we saw since Tuesday. You can see here on that big jump on Tuesday, and it's pretty much extended those gains for a third day today. And we've seen that before. Whenever Draghi says something that pushes the euro higher, we see the ECB trying to backtrack on those comments. So basically, those sources are saying that Draghi's speech was overinterpreted, and he did, and basically the markets are wrong to assume that we might see a tightening in ECB policy as early as September. What Draghi meant to say was that in September we'll probably see a decision on when the bank will start to scale back its massive stimulus program, and also he was trying to signal to the markets that due to the fact that underlying inflation is still low, it doesn't mean that the ECB will be easing policy further, but it looks like the markets maybe overinterpreted those remarks in being overly hawkish, but those attempts didn't really have much impact on the market. As we can see, the euro has continued to rise today. And moving on to the pound, we saw quite a bit of a turnaround in the Bank of England Governor Mark Carney, who just a week ago was very dovish. He even appeared to be shutting down the more hawkish members of the Monetary Policy Committee. And yesterday, though, he seemed to suggest that rates in the UK could be rising at some point later this year. He said in a speech some removal of monetary stimulus is likely to become necessary if spare capacity in the UK economy continues to erode, and that the MPC will be debating this over the coming months. So the pound is at a 5-week high of 1.2994. That's the level seen before the the UK election results, and when the pound was benefiting from an expectation that Theresa May was going to win a landslide election. We already seen that the Bank of England has already taken some measures to tighten credit rules for UK lenders, given the fact that the UK economy has proved to be resilient after the Brexit shock, and on signs that consumers are borrowing too much in the UK. So a rate hike at some point this year is looking increasingly likely, and we may well see the pound back above 1.30 in the near future. Moving on to the Aussie and the Kiwi, we're seeing the Aussie benefit from higher iron ore prices. Of course, iron ore prices had fallen sharply in recent weeks. So this week we're seeing a bit of a rally. That's helping the Aussie climb to 3 months high of 0.7680 against its US counterpart. The Kiwi is also not doing too badly, although it hasn't yet managed to break above Tuesday's 4 months high of 0.7344. We did have some positive business survey data out this morning. The AUDNZD business outlook in New Zealand rose to 24.8 from 14.9. That's the highest in 9 months. So that has supported the Kiwi this morning. And in more commodity currencies, the loonie is receiving a double boost from a more hawkish Bank of Canada, as well as higher oil prices. The Bank of Canada's Governor Stephen Poloz, he once again was speaking yesterday, saying that the rate cuts seen in Canada after the oil price crash have done their job, and the markets have are pricing in a higher chance of a rate increase as early as July by the Bank of Canada, although most likely it will probably come in the autumn. So the loonie is currently at a 4.5 months high of just above 1.30 level against the US dollar. And in oil, although oil is up it recorded a 5th straight day of gains yesterday and is on track for a 6th day of gains. It is still, these are only very modest gains given the sharp falls we've seen over the past couple of months. Oil prices were helped yesterday by a bigger than expected drawdown in US gasoline stocks, although oil stocks did actually unexpectedly rise. We also saw US production fall by the most in almost a year in the US. They've fell to 9.3 million barrels per day. So that has boosted oil prices this morning. We can see US crude just above $45 a barrel. Looking at today's economic calendar, we have business surveys coming out of the Eurozone in terms of the economic sentiment index and its components. We've got German flash inflation PMIs coming out shortly, and in the US session we're going to have the final GDP estimates for the first quarter, as well as the weekly jobless claims. That's it from me. Thank you very much for watching, and have a great day.